Hello and welcome to this next installment of training videos on Research Plus. Today I'm going to look at the stock screener. Now, the stock screener can be found either in the Research tab or in the Research Plus tab. So let's click on the Research Plus tab. You have the various sections here: real-time premium news and premium strategies, and I'm going to select the Smart Screener, which is a more updated version of the overall stock screener. However, if you're not comfortable with using the Smart Screener, what you can also look at is the other options here in these various highlighted tabs along the top. And at the moment we've got the Smart Screener set up as a default, but we can also have the key fields. Click on that, and that gives us the most popular fields used by our clients within their screening criteria, and there's about 10 or 11 different fields there. You can also look at ratios all on their own, and that basically lists all the key ratios like EPS growth, next year EPS growth, dividend growth, income ratios as well, and valuation ratios. Or you can use the full screener, which is down on the right hand side here, but there are also a number of other tabs. For the purposes of this demonstration, I'm going to use the key fields tab, because there is a lot to the stock screener. I want to try and make this video as brief as possible, but also give you a flavour of the amount of content there is within the stock screener itself. So let's start with the market cap. There's over 3,500 stocks on the LSE, and we want to drill down and filter out any stocks that we're not interested in. So we'll start with a minimum market cap of £2 billion. Notice how the results change there as I type in the number of numbers in the minimum field. Now I'm going to look for a stock that's got a dividend yield of a minimum of about, say, 4%. And the reason for that is, in this current low interest rate environment, we want to try and get some stable income stocks that are also going to show some dividend growth as well. So I'm going to look for dividend growth of an average of about 3% over a 1 year period here. Now you can select 2, 3 or 4 years, but I'm going to select 3% over 3 years. Let's change that back to 1 year, and that takes us to 17. I'm now going to run that screen. So we're going to run that screen. It's going to churn up the results from the database and return the following equities. Okay, and the classic defensive stocks are in there: AstraZeneca, BAE Systems. As you can see, the market cap there. The average dividend growth over 1 year is 12.2%, dividend yield of 5.7. So there are particularly, there's a good array of stocks in there: Royal Dutch Shell A, Royal Dutch Shell B, BT Group, British American Tobacco, a lot of defensive stocks in there. So we've basically looked at these stocks here. We can now drill down by clicking on Vodafone Group, and that will take us to the Vodafone company page. And here we have the Vodafone company page, complete with all the key valuations. So you've got the Vodafone financials there: 6.4%, latest dividend yield. The forecast dividend yield is 6.7%, a dividend cover of 1.9. It's still pretty good. I prefer a dividend cover of about 2, but 1.9 is pretty okay. It shows that they are more than capable of funding their dividend requirements. You've also got broker recommendations. And the thing about Research Plus is, what you can do now is, once you've drilled down into those results, I'm just going to click the back key there and basically go back to the results. Once you've got those results, make a note of them, and then you can access the Research Plus terminal here and open the chart, look at the level 2, and look at the various other tools within Research Plus to drill down and finely tune your research on this particular stock. What we can also do within Research Plus is we can test the strategy to see if that strategy has worked well historically, and that is quite important, because you may want to be able to design a strategy, but you want to know whether or not it's worked on a historical basis. So we put something in there called the backtester, and the backtester basically churns up those numbers and basically returns the results over, in this case, a 5-year time period. So from the 26th of May 2005 to the 26th of May 2010, the strategy has performed at 4.8% against a benchmark performance of 4.6%. Not great. So even though that strategy has been profitable, in comparison to the FTSE, it's only outperformed it by 0.2%. So not a particularly great strategy. What we've also got within the backtest tool is a number of common strategies used historically by quite well-known investors. Now if we scroll down this page here, we can see a number of popular strategy screens here: high yield, intrinsic value, measure growth, price trend, as well as a number of premium screens. So let's look at the cash rich screen. Now the cash rich screen is a value and an income screen, and basically in this time of big debt problems and everything else, investors are looking for companies that have loads of cash, that are able to basically fund their operations and don't have big exposure to debt. So that's what the cash rich strategy does. Let's look at the results for it. So I'm going to run that screen and see what companies it returns. 22 stocks, and here we go. These are the results. So 3i Group's at the top of that. AstraZeneca basically generates a lot of cash. BP, British Airways, well, I might stay well clear of them given their current problems with strike action. But again, you've got some defensive stocks in there: Glaxo, Imperial Tobacco. So we're going to test that strategy and see how that strategy will have performed over the last 5 years. And hopefully it will have performed well. And yes, it has. It's basically generated a 37.8% return against a benchmark performance of plus 4.6%. So it's outperformed the FTSE 100 by 33% over the last 5 years, and it's this sort of strategy. And let's look at the criteria for that scenario. Total cash £1 billion, increases and decreases in cash minimum of 1 million, and a net cash in, cash out from operating activities. So that's the criteria for that particular strategy. So that is the backtest tool. That's the screener. As you can see, it adds a lot of value to researching equities. Hopefully this gives you some sort of insight as to how the screener works. If you have any questions, please let us know on our Facebook page. We'll be more than happy to help you out, answer any questions you may have. But in the meantime, thanks very much for listening.